Everyone, and welcome back to Forex Scope. It's great to have you here. Today, we're diving deep into the AUDNZD pair on the 15-minute and 1-minute charts. If you're looking for those critical insights and potential trading opportunities, you've come to the right place. Before we jump into the charts and uncover the upcoming price movements, make sure you hit that subscribe button and turn on notifications so you don't miss any of our analyses. Alright, let's get started and see what the AUDNZD has in store for us. This support zone is identified between the timestamps 176-286-6000 and 176-287-1400, with the upper bound of 1.15416 and lower bound of 1.15368. Looking at the price action within this period, we observe several candles exhibiting significant interaction with this price range. Specifically, the candles around 1400 hours 176286960 and 1415 show clear rejections and attempts to break below this level, with the low price reaching down to 1.1526 and the high price not exceeding 1.15481. The multiple touches and the preceding price action suggest a level where buying pressure has historically emerged, causing price to bounce back up. The presence of large wicks at the lows within this timeframe further reinforces the idea that sellers tried to push the price lower, but buyers stepped in, creating a significant support area. The price action also indicates a period of consolidation or indecision before a potential move, which is characteristic of accumulation or distribution zones. This zone represents a critical level where the market found buyers on multiple occasions. This resistance zone is identified between the timestamps 176-285-4300 and 176-285-9700, with the upper bound of 1.15568 and lower bound of 1.15504. Observing the price action within this timeframe, we see multiple candles struggling to break decisively above this level. The candles around 9:45 176-285-4300, 10 o'clock 176-285-5200, and 10:15 176-285-6100 showcase strong rejections from the upper part of this zone. The high price reached up to 1.15562, while the low price stayed above 1.15484, indicating that attempts to move higher were met with selling pressure. The significant upper wicks on these candles are a testament to the resistance encountered. This area exhibits characteristics of a price ceiling where sellers have consistently stepped in to defend this level. The prolonged interaction with prices within this range suggests a consolidation phase, where the market is finding it difficult to move higher, creating a potential area of selling pressure. This zone represents a significant hurdle for the price to overcome, as evidenced by the repeated failures to sustain prices above it. This support zone is identified by several consecutive 1-minute candles that tested the 1.15425 to 1.15429 price range. Specifically, from the candle at November 11, 2025, 2112 to the candle at November 11, 2025, 2113, the price action shows a period of consolidation. The low of the 2112 candle was 1.15423 and the open of the 2113 candle was 1.15425, indicating a struggle for sellers to push the price lower. The high of the 2113 candle touched 1.15426, showing some upward pressure. Before this, the 2111 candle closed at 1.15425 and the 2112 candle opened at 1.15428, then traded down to 1.15423. This recurring interaction around these levels, with multiple candles failing to decisively break through, suggests that buyers are stepping in at these prices, creating a zone where demand is present. The proximity of the lows and closes within this narrow band of prices, coupled with the Bollinger Band middle line hovering above it around 1.15436 to 1.15437 during this period, further validates this area as a potential demand zone where the price found temporary equilibrium before moving higher or sideways. The high of the entire range in this period is 1.15428 and the low is 1.15423, clearly defining a stable price area. This resistance zone is characterized by a sharp increase in price followed by immediate rejection, indicating strong selling pressure at higher levels. The candle at November 11, 2025, 2328 saw a high of 1.15464 and opened at 1.15456, followed by a close at 1.15464, suggesting a battle at this level. The subsequent candle at November 11, 2025, 2329 opened at 1.15465 and traded up to 1.15465 before closing lower at 1.15461, with a low of 1.15461. This rapid price movement upwards, only to be met with significant selling that pushed the price back down within the same minute, clearly marks this area as a resistance. The Bollinger Band upper line was also hovering around these levels, 1.15443 to 1.15445, during this time, implying that price was at the upper boundary of its recent volatility. The high of this identified range is 1.15465 and the low is 1.15449, showcasing a price area where sellers have been more aggressive in preventing further upward advances, leading to a potential ceiling for the price. The volume also increased significantly during these candles, further confirming the importance of this price level as a point of resistance. The price is currently at 1.15461, which is within the resistance zone identified between 1.15465 and 1.15461 for the 1-minute timeframe. However, this level also coincides with the upper bound of the Fibonacci retracement, 1.15463. The 15-minute chart shows a strong resistance area between 1.15504 and 1.15568, and the price is currently below this. The recent price action on the 1-minute chart shows volatility with small fluctuations around the 1.154xx levels. Considering the confluence of resistance from both the 1-minute and 15-minute timeframes, and the fact that the price is near the upper Fibonacci level, a slight pullback is anticipated before any potential upward continuation. The tick volume has been moderate, suggesting no strong immediate conviction. We will anticipate a short-term move down towards the support zone at 1.15429 to 1.15425 before a potential retest of higher levels. The Bollinger Bands are currently suggesting a period of consolidation, but the recent price action indicates a struggle to break higher, which might lead to a temporary downward correction to gather more momentum. The overall trend on the 15-minute chart, however, is not decisively bearish, hinting at the possibility of a rebound after this short-term dip.